Good morning, everyone. Man, the markets are I think they're in shock this morning after last week. Finally, a broad-based move after months of a few stocks leading the way. We all know the story. So now, and all of this based on, I think everybody was kind of surprised. I mean, I was. I mean, that employment number came out, or the jobs number came out with this big expansion, which would viewed as being bearish since the Fed would seem to raise interest rates. And then just the fact that wages increased less than they believed they would have been, and a few more people collected unemployment. It was like risk off, all in, everybody. They're not going to do anything. And it's just been a back and forth with, how quickly things can change here. And so is based on this move that occurred. I'm just looking at the spiders here. We all endured this chop, and overall, just this trading range you can see on the weekly chart, just major whips ups and down. And look at this going on basically for a year. And so now, do we make the assumption that this could now rise potentially all the way up into here? And it's possible. I'm thinking it's possible, but apprehensive of that just because of this market and how things can change on a dime. But what happened at the end of last week was certainly a major move in the right direction and a positive event. This high over here should be relatively insignificant. And I explained part of that in the weekend letter. And this comes up from time to time. And thinking, as you come up to a resistance area for the first time, how formidable will it be? Well, there's things to consider, meaning how close are you to it, meaning how much time has passed. And so the first time it even gets close, it's going to be like a monster resistance. And then, this couldn't get there and this couldn't get there. And now this is there. And, you've got months that have gone by. So it should get through it. Maybe it stalls a little bit, especially since it's up 2 days in a row like that. And I think it should actually get through it. 4,300 calls, lots, open interest across the chains. 4,300. We'll get to SPX. So a breakout, and financials moved up. The chart doesn't look all that great. I mean, most of the sector charts still don't look all that great. The ones that have been doing well are extended, but a lot of what has to happen now is catch up. And small caps, you saw that, I'm sure, close at the high, breaking out above all of these highs. And yeah, exactly. Part of what I wrote in the letter, I put charts of weighted and equal weighted and compare and showed the two. And actually on Friday, the equal weighted charts, QQEW and RSP for the S&P 500 outperformed the weighted ones, which means there were stocks catching up and those that were leading lagged. So I know it doesn't have a good void, Dan, but the idea is, and I'm sure as stock pickers, we will pick the ones that will have the voids. So it's the concept of breadth expanding. And this is something we've talked about for months. And you can see this breadth gauge down here. It was just hanging below zero as the markets were kind of this grind breaking out and getting into initial extreme. And so this can go higher. This can go higher. And so while, the outlook here looks quite positive, there's always going to be pullbacks. And is the range. Looking at the Dow, this was something I looked back at over in the letter over the weekend. This was like, wow, look at the size of this bar. It's over 700 points, and I matched that up with at big expansions in breadth. And most of the time since last year and this year, the 700-point bars and the expansion on breadth were on the downside. So there was a time, I forget what the date was, but I had to go back a year or so, maybe a little more, where that occurred, and the markets went up. So we're always looking for these rhymes in the market where an occurrence that happened in the past and now it happens in the present suggests we'll get a similar result. And so, breakouts in the Russell, wide range bars, expansions in breadth, financials perking up a bit. All of that suggests, the markets can go higher. And, now ideally we get some kind of a trend develop versus just, it just comes back and just a choppy grind. But we'll just see how it unfolds. We still got, the Fed in a couple of weeks, and there's options expiration in a couple of weeks. So there's always going to be those, news events and other things that are tugging on the markets. But what I'm explaining here is looking at things from a more intermediate term perspective. And then we just look at the charts and multiple timeframes and do what we do to pick our points and what we're going to take advantage of, with that bias. And just looking at, this Dow chart, it's certainly not anything that looks all that attractive, but the spike down, the move up to resistance, and, that bar last week, and maybe it does a little bit more backing and filling, and then we'll see if it can get through here. But look, what happened last week's a hell of a lot better than what we've been dealing with. So let's see what comes. Right. All right. So spiders are doing nothing. Just like, is this for real? Is this going to keep going up? And it is a little extended in the short term, as you can see here. So likely to pull back a little bit. We'll see, how much buyers step up on the dip or not, or whether they're going to try and push it higher again. It would make sense for today to be a resting day. Is typically what happens. And so I always look at the futures. You can see just nothing up there, and it is near this prior pivot high. It's got a little room before it could get there into that area. But as I mentioned, we got months that have gone by, and so when it'll stall there, it'll stall there more because the way it advanced to getting there. And then we'll just want to see how it consolidates, and whatever it's going to do, it'll do. Right? We're just creating a bias here. SPX. I'm not all that comfortable with this. I mean, that's been the way lately, that we were spoiled with these wide areas above and below. And last I looked, let's see if anything changed here. Probably not. But 43.25. Is there juice there, Jake, at 25? 43.25. It's a little less. So I assume, Jake, that you're looking at this and thinking, hey, that's 55 by 60, and it's not as much. But if you go, whatever, you don't have to go that wide to make it worthwhile. To get a little extra room up above there. But I think the upside, just based on things going up 2 days in a row, is less likely to be able to get to that area. And the downside at 42.40, I think it would be, even if it went down there today, I think buyers would step up on there. But, after, typically you'd get an inside kind of a day going nowhere. But, but it's, we got, like I said, spoiled in the past that the strikes were so far away, and now they're quite a bit tighter. So not what I call no-brainers, but I think they're reasonable, especially the upside. It would be unusual for this to go up again, like that far for a third day in this current market. Someone's asking me, Stavros asking me, is there a divergence between ES and SPX at the August high? Well, the futures are always, well, not always, but most of the time are going to be ahead. Whereas you have futures trading a contract. Sometimes the futures market will get ahead of the cash market and then things kind of readjust. Whereas SPX is based on, those stocks that are in there. So as someone trading the ES contract, you just think it's going high. You keep buying and buying, and eventually that spread between the cash and the futures becomes wide enough that it could be arbitraged or whatever is going to bring it back into, connect. You can't get too far out of whack. So I think that's what you're asking me. You can see that, the high there in SPX, and looking at the futures, see, it's not that far away, but the numbers aren't going to match exactly. So I think that's what you're asking me. All right. So the leaders began to lag last week. The semiconductors actually had a little bitty red day. They closed under the open, and tech stocks. So a little distribution, profit taking on with the leaders and moving into, speculative small caps, some financials, I guess, whatever, people might like to buy. But you can see here, it's where we see the slowing momentum, the distance between the highs. This red thing doesn't need to be there. There's really nothing to the left. But you can see the narrow range bar from last week. And, the whole number will be a stopping point, but that's 500 points away. But, it could pull back, consolidate. This is the kind of trend you want to see across the board. And I'm hopeful that this is what we begin to see happen in the S&P, in the transports, in the Russell, a broadening of the markets where, there's this apprehension. Hey, this moved a lot. Let me sell, and it pulls back, but the pullbacks are relatively shallow toward minor support, and then it advances again. What a bullish trend is really about, not this mess that we've been dealing with. Right? So transports, they cleared these highs. That's a positive. Not amazing, of course, but it was good to see the transports participate. And of course, we already looked at the Russell, and they moved up and cleared those highs. That's a big positive. This is, of course, many will begin to look at this and say, well, that's not a positive, being as low as it is, because being down here is where it's gone up from in the past. Well, days, and the VIX was low, and I can't remember the dates, but I did send out the advisory letter to everyone in the market results thing, so it went to everybody. But the last time it went down low like that, it just stayed low for several weeks, and the markets advanced before a retracement started. So being low is one part of observing what the volatility index does. And eventually it'll rise, but right now it's low, confirming the breakout that we saw. And so just because it's low doesn't mean it has to go up. And, I mentioned that here, and it kind of stayed low, but most things just were grinding. Well, Jose's asking me for money to rotate into IWM. That actually happened on Friday. It happened in a big way. So, regional banks, which don't look very good, but I guess, you can see how this began to move up. And oil stocks, you probably heard the oil news this morning. Oil moving up a little bit on Saudi cutting reduction. So that'll raise some inflation fears, but so far it's relatively low. I don't know what's up with Bitcoin. It's not, it's down, but there's nothing going on there. Qs we looked at, the Dow has been the laggard, but just look at the size of that bar. Now it's into this mess here. So of course it's going to deal with it and it's going to stall. And look, our factory work is, let's see if it stays in the upper half of that bar. And can it eat through this supply? Sometimes we use the term transfer of supply. And what that means is it goes sideways up here. And of course, it could blast through it. I don't think it will. But as demand has increased, supply now will increase. And if those two forces are at a standoff, this will chop sideways a bit. Eventually, it'll probably dip lower and then pop back up again. And so this is going to have to deal with, you can see the weekly chart, one mess and then another mess. And so I don't think we're totally off to the races so quick, but look, we got a very positive event. Utilities, they turned around as interest rates came in, Fabio. This is bottomed out. And you can see the 10 years moving up here this morning. And so as this pulled back, utilities found a bottom. And I think there's much more opportunities in other things. I mean, maybe for a short-term trade, but if these interest rates, are going to move up as they are now, I don't think utilities are going to give you the bang for the buck. I mean, they had a decent turnaround day on Friday, and but they're in a downtrend like that, so there could be a short-term trade there. But hey, check out Dan's chart of the week with catch-up trades. Just go to the website at the top, click chart of the week. You did a great video. And that's what we got to start looking for, these catch-up trades, these ones that are going to have the potential to catch up, going to have a bigger moves, because now as money, some profit taking comes out of it. I don't think tech's going to fall apart, but I think some money comes out of tech and goes into those beaten down things that play some catch up. And that's why breadth expands. And, so that's what we have right now, and what we're going to be continued to look for. And as I said, looking for, what the Fed's going to do. The dollar has been holding up here with interest rates, still staying up here high. We'll see if they pause in a couple of weeks. That's the belief. 2 weeks ago, it was like 65% chance they were going to raise. Now it's 25%. So, everybody's on edge. And we'll see how much Friday's move brings relief to that and where we go from here. All yours, Dan.
Good morning. Yeah, I'm so tired of listening to CNBC just talk ad nausea about, are we going to get a hike? We're going to get a pause. We're going to do a sprint. It's just like, who cares? We'll know when we know, and we'll trade in between. All right. So just to emphasize what Greg said to McGraw, there are, here, I'll take this AMID as an example. Beautiful example here of what we're illustrating in terms of catch up and bottoming trades, that you can't just say it's not as easy as, oh, well, let me see what's beating down the most on the year, and then I'll just buy that blindfolded. No, because what's weak can stay weak. So we need a pattern with a big void. So see, this is a beautiful bottoming pattern. We got our flag 2050, got a breakdown failure, got bullish price action. I think it's going to get through this one, no problem at all. And we'll see what happens here. But then we got a monster void at 85 and higher. So that I see my minders here showing a gapping up, but I don't see it in my pre-market. Or wait, maybe I lost pre-market. I did. So yeah, the video I talked about gave many examples, and there's many more. We're not going to be void of trading ideas here at all. Costco, that's bullish price action at resistance. Nothing to do right now. Carvana's kind of a pseudo 1, 2, 3. I would like it better if that tail weren't as big, but it's a breakout on the weekly, another bottoming pattern. Fundamentally, Rita in the room has been telling us for years they're probably going bankrupt because their fundamentals are horrible. And I remember telling her, she's off tour in Europe, I said, I don't care about fundamentals. I care about a compelling pattern to make money. So if it's a 1 to 4 day trade or whatever it is, so be it. All right, got a ton of trading ideas here. I just saw this thing going by the ticker. It's light volume though, 69,000. But this, the buy setup, created support here over time, gapping up here pre-market. If it's, I'm not going to mess with it because the volume's so light. Here's another bottoming pattern. They're all over the place. Now, this is Nordstrom, a retailer, obviously. So this one is showing relative strength to the sector. So here's a beautiful example also of I'm not just trading what's beat up, because there's no pattern here. There's no price void, even though it had a nice day on Friday. There's nothing to do with this pattern. But that doesn't mean you can't drill down to look at the components to find a compelling one like this. So things that are extended, ideally, I'm looking for 1 to 2 day consolidation. I mean, Greg showed you the hourlies on the 4 horsemen or Climos. So, the problem is if a bullish run starts and the market doesn't care about my 1, 2, 3 setup, that's going to be the problem if it takes out the 30-minute high today and keeps going. But this would be a no-brainer put spread under Friday's low, and it would be a 1, 2, 3 if it sets up for tomorrow. Can't. Yeah, that's another. It's a bottoming pattern. It's an igniting bar closed above 2 pivots or even 3. So Friday's bar broke the back of the downtrend. But the question is, how do I make money right now? And the answer is, I don't know. I mean, it's a bullish 15, maybe 30-minute high for a day trade. But I personally wouldn't touch this as a swing unless I got my inside bars. Jose asking about Schwab and Duncan. Yeah, we're already in Schwab, Jose. And I forgot to mention this one in my video, but this is a beautiful example of a bottoming pattern catch up, also showing relative strength to the regional bank sector. We're in it from this igniting bar, so it's kind of been dead money. But and the reason I didn't have many put spread ideas for the weekly options trader this week is because the premiums were so darn low. So I looked for the Schwab, and it was like 22 cents or something. I'm like, I'm not messing around for 22 cents. So yeah, that looks great. Dunking. Yeah. Hey, nice 15-minute chart here. So this could be a fantastic day trade. I'm gonna put that in this middle window, get rid of that other low volume thing. That's a beautiful 15-minute. And now look at this, is pre-market, obviously, from this dotted line. And I use my pre-market pattern when it's liquid, and it has a pattern I can interpret. So just visualize this consolidation as if the market never closed on Friday. And that is a beautiful 15. So yeah, that's a tier 1 potential day trade. Swing trade, yeah, I mean, it can go, you know, a little more. I just think there's some others that have bigger potential to me, but day trade I like a lot. Dawn, this is another bottoming pattern. They're all over the place. And the problem is it's gapping way the heck up here. So I'll just come back to it. Sam gave me this one as a short idea, and you better believe I have alarms on a couple of short things, because if the alarm goes off here at 73.50, look at this daily, weekly, monthly are all bearish. So yeah, I got a little two bar bounce, whatever, Thursday and Friday, but you overlay that with the broader markets, and that thing's weak as can be. So that's a great short watch. Let me set my alarm on the other computer too. 73.50. I'll make it 73.70 actually. The Z alarm went off. Let's see. So this one I like a tad better for a swing. To compare to dunking, because it has a bigger void. So it's an example of 73. It's an example of, it's weaker than the other, but it has a better risk to reward for a new swing. It's, you know, it broke out inside bar, bottoming tail, closing at the high, and it has a void. See, it's selling off here at 10 from MSI. Here's another short idea. I got my alarm already at 281. Twist, another bottoming pattern. Set an alarm. I got an alarm and I think 1645. I'm not sure. No, I don't. Another beautiful bottoming pattern with a void. Catch up. And in the video, I also talked about trading Climos like Starbucks, Target, you know, FL. There's a ton of them. Semis were weak Friday, as we know, and now NVIDIA is gapping down. So this is a day trade short watch. I got it. I already got it. It's one of my general's fangs, whatever. So it's a day trade short idea plus call spread idea. What's going on here? It's gapping over this bar. I don't know. I don't like the wick trades. OM, another bottoming pattern. You can buy Friday's high, stop Thursday's low. Montauk, bottoming pattern. Looks great. Inverse head and shoulders, left shoulder, head, right shoulder, 20 and 50 flattening out. I'll set an alarm 726. I think I did already. Yep, 726. There's my alarm already. CCRN. That one I don't think has as big a target, so I'm going to cancel that one. Twist up alarm already. We just talked about it. Not doing anything. Qs have the best 5-minute bar here coming out of the gate. But there's nothing for me to do there. Spiders are extended. Typically I don't trade the first 5 minutes, period. And on Mondays in particular, I typically like to wait 10 minutes. IWM might be setting up for that beautiful 1, 2, 3 that we were talking about, that I want on so many things. XOP alarm, we were trying to do a put spread on this, but the gaps, hey, dunking there, remember I said, I was telling Jose, that's a tier 1 day trade setup. There she blows. Now it's just up to you how aggressive you want to be, but you heard me pounding the table. I love that 15-minute chart pre-market. Morgan Stanley up alarm, another bottoming pattern. This was a put spread candidate, but there was no juice. Same old story. But my alarm went off. And Knox up alarm. We let's see, I forget what we're doing with this. And Knox buying a third position as a core long. Okay. I'm always kind of late on the alarm on updates here on Monday morning. I'm busy, so I will get to them.
URI bottoming pattern. Keep an eye on it for an entry intraday. The 5 minutes a little extended here, but I like it. It's not enough. The spread is too wide for a put spread there.
Look at HRI will be a beautiful 1, 2, 3 for tomorrow. Beautiful. And Knox is moving.